Welcome back to the Deep Dive. Today we are digging into something the sources call the ethical edge in business, conscious capitalism. Now, for decades, the conventional wisdom, it was pretty much focus on profit relentlessly. Yeah, if you wanted real commercial success. Moral responsibility, environmental stuff that was, well, maybe nice on the side, but not for the core business,
Right.
not for the balance sheet.
Exactly. And that core idea that you had to choose between making money and, doing good, that's precisely what this whole movement pushes back against. The sources we're looking at today, they really map out how businesses are, well, fundamentally rewiring themselves.
Rewiring their DNA almost.
Yeah, precisely. We're not just talking about slick marketing here. This is about a deep foundational transformation in how successful businesses operate now, and frankly, how they'll likely dominate in the future.
Okay, so before we get to the transformation itself, maybe let's talk about the starting point, the cynicism. Why did capitalism get saddled with this greedy reputation in the first place?
Well, a lot of it boils down to a pretty influential idea from, say, the mid-20th century, maximizing shareholder value above all else. And when that became the only goal, everything else, employees, suppliers, the environment, the community, it often got reduced to just, well, costs to be minimized.
Okay. And that created what the sources are calling the illusion of the ethical divide.
That's the term they use, yeah. The illusion of the ethical divide. It suggests the problem wasn't really market forces, but maybe a failure of imagination. Or perhaps governance.
Interesting.
It seems like a bit of both, really. That intense focus created this false dichotomy. Leaders felt they had to choose profit or purpose, but today's world, hyper-connected, transparent, that choice isn't just difficult, it's often impossible, or at least really damaging long-term.
Right. Things like ignoring environmental costs or dodgy practices.
Yeah.
Those used to be hidden, maybe. Now they're out in the open. Instantly.
Exactly. And they carry real financial penalties, reputational damage. It's just not sustainable. So the transformation we're seeing is businesses realizing, okay, wait, long-term value means we need a healthy system.
Okay, that framework makes sense. But if we're talking about more than just, balancing things if it's a real foundational shift,
Yeah.
how do we actually define it? How do we pin down conscious capitalism so we know it's not just sophisticated PR or greenwashing?
That definition is absolutely critical because, authenticity is everything here. The sources lay out a framework based on 4 interdependent pillars.
Interdependent, so you can't just pick and choose.
No, absolutely not. It's systemic. You really need all 4 working together to genuinely be a conscious business. Otherwise, it doesn't hold up.
Okay, walk us through them and maybe tell me how these pillars are different from, say, what you might read in the standard corporate social responsibility report, a CSR report.
Good question. So, pillar number 1, higher purpose. This is the idea that the organization exists for something more than just making money. Money is vital, obviously. It's the result, keeps the lights on. But it's not the primary reason for being. The purpose needs to be bigger, something that actually inspires people.
Okay, so unlike CSR, which might be like donating a percentage of profits, something bolted on this higher purpose is woven into the fabric. It's the why.
Precisely. It's why the business exists and how it aims to contribute to the world, fundamentally.
Okay, sounds good in theory, but how does that purpose translate into, actual actions? How do we measure it?
Well, that leads straight into the second pillar, stakeholder orientation. This is really where the rubber meets the road. It basically replaces that old shareholder-only model. Instead, it recognizes that the entire business ecosystem matters. Your employees, your customers, suppliers, the community, and investors are all interconnected.
So the idea is everyone needs to thrive for the business to thrive long term.
Exactly. And the sources are clear. This isn't just about being nice. It's not pure altruism. It's recognizing a systemic dependency. If you squeeze your suppliers too hard, eventually you're going to have quality issues, right? Or supply chain disruptions.
Okay, but here's where I see a potential snag. Doesn't focusing on all stakeholders risk, well, decision paralysis? If you're trying to make everyone happy, employees, customers, investors, the planet, doesn't that dilute the mission? Make things slow and costly?
That's a very common concern, and it highlights why the other 2 pillars are essential. Pillar 3 is conscious leadership. Leaders in this model, they have to be guided by that higher purpose and the stakeholder orientation. They're almost like servants to the purpose, not just dictators focused solely on quarterly earnings.
So they need the skills, the emotional intelligence, maybe to navigate those competing needs.
Yes, to see the whole system. They need to understand that maybe taking a small hit for one group now, like, say, paying suppliers a bit more, could actually create huge long-term benefits for everyone, like a more resilient supply chain.
Got it. So it's about intent, governance. And I'm guessing that intent has to really live and breathe throughout the company. Which brings us to the last pillar.
You got it. Pillar 4. Conscious culture. This is the environment, the atmosphere within the company, built on things like trust, accountability, transparency, caring. The culture is what institutionalizes the purpose and the values. It makes sure they stick, even if leadership changes or the market gets tough. It's not just about, free snacks and ping pong tables.
Right. It's the embedded values that act as a kind of fail-safe against bad short-term decisions.
Exactly. It's the cultural immune system, in a way.
Okay, these concepts are clear, but let's make them more concrete. The sources mention examples. Patagonia comes up a lot. How does their purpose show up structurally?
Patagonia is a classic case, right? Their purpose, we're in business to save our home planet. That's not just a slogan on a poster. It directly drives decisions. Like their famous "Don't Buy This Jacket" campaign urging people to buy less, or their huge investment in repair programs. They've built their structure around environmentalism and product longevity, even if it means lower sales volume sometimes.
And what about Whole Foods? The sources mention their approach after acquisitions.
Yeah, that's interesting. When big companies buy smaller ones, the usual playbook is often, gut the existing culture for synergies and efficiencies, cut costs. But Whole Foods, drawing on that conscious culture pillar, apparently made a real effort to integrate acquired companies while preserving their values. They treated the people and the local supplier relationships as assets to keep, not costs to slash.
So that stakeholder orientation was visible in how they handled the human side of the acquisition.
Right. Protecting that human capital.
Okay, this all sounds, well, frankly, like a much better way to run a company. More humane, more sustainable. But the skeptic, the hard-nosed business leader, is still asking, does it actually make more money? Or is this just nice-to-have management theory for companies that are already doing well?
That's the million-dollar question, isn't it? And the evidence we have now is pretty compelling.
Let's get into that. The tangible benefits, the bottom line.
Okay. So, numerous studies highlighted in the sources show that over the long term, the financial performance of these conscious businesses tends to be consistently superior. Let's start with risk. Think about it. By prioritizing stakeholders, caring for employees, building community trust, these companies are inherently more resilient. When a crisis hits, they often have a deeper well of goodwill to draw on.
And that trust must translate directly to customer loyalty too, I imagine.
Absolutely. In today's market, where consumers are very aware, brand trust is gold. People don't just stick with companies whose values align with theirs, they often pay a premium for it. The data points to higher repeat business, lower customer acquisition costs. Essentially, your customers become your best marketers.
But maybe the biggest edge today isn't even customer dollars, it's talent. You mentioned the ecosystem. Attracting and keeping good people must be a huge factor here.
This is probably the most critical financial argument in the sources right now. Think about the workforce millennials, Gen Z. They are actively demanding purpose. They're choosing jobs based on mission and values, not just the paycheck. So a company with a clear, authentic purpose and a strong, conscious culture, it becomes a magnet for top talent.
Which dramatically cuts recruitment costs, reduces turnover. Those are huge expenses.
Huge. And think about productivity, too. When people feel connected to the mission, when their work aligns with their values, they give more. That discretionary effort going above and beyond, it skyrockets. The sources link this higher engagement directly to things like more innovation, better problem solving, improved operational efficiency. It really does function as a concrete competitive advantage.
Okay, so if the financial argument is that strong, why isn't every single company switching overnight? Let's tackle the pushback head on. We hear things like, it's just too expensive, or it takes too long to see results.
Yeah, the too expensive argument often comes from thinking about it like old school CSR, like it's a cost center, an add-on. But it's really more like investing in infrastructure, building real stakeholder orientation, fostering that culture. Yes, it takes time and initial investment, no doubt, but the long-term returns, reduced risk, lower turnover, stronger brand loyalty. The argument is that these far outweigh the upfront costs.
And what about authenticity? You mentioned the risk of just putting up a facade.
Yeah.
The woke washing trap. How easy is it for people to see through that now?
Oh, incredibly easy. Consumers, employees, they're savvy. They don't just read the shiny mission statement on the website. They look at actions, supply chain transparency, pay equity data. How does the company react when there's a real ethical dilemma?
Right. If a company talks green, but lobbies against climate action.
Exactly. That kind of misalignment, that hypocrisy, it gets spotted instantly. And the backlash, the damage to trust and reputation can be far worse financially than if they'd just stayed quiet.
So sincerity has to be deep, baked into that conscious culture you mentioned.
Absolutely. Otherwise, the market will sniff it out and penalize it
Yeah.
severely.
Okay, that makes sense for the big players, the multinationals. But what about, say, the listener who runs a smaller business, an SMB? They don't have massive global supply chains or huge HR departments. What practical steps do the sources suggest for them? How can they start without breaking the bank?
That's a great point, and the sources offer good advice here. For smaller businesses, the shift often starts very local, very focused. Forget the big global campaigns for a moment. Start by really defining your specific higher purpose. What unique value do you bring to your immediate community, your neighborhood? Then, practice stakeholder orientation simply by genuinely listening to and caring for your employees and your local suppliers. Build those relationships.
So practical steps might look like
What?
transparent communication.
Yes. Being open about decisions, maybe adopting wages that are fair, perhaps slightly above the minimum, even if it pinches a bit initially. Prioritizing local suppliers, not just for cost, but as a commitment to the local economy. These are often structural choices, not necessarily expensive marketing campaigns. They might mean accepting slightly lower margins in the super short term, but they build that crucial social capital, that employee loyalty, which creates resilience down the road.
So let's pull this all together. What's the big takeaway here? It sounds like the bridge between profit and purpose isn't just a nice idea anymore. It's becoming
Well, yeah.
strategically essential.
I think that's exactly right. It's proven, it's financially viable, and for any business looking to compete and last in today's market, it's increasingly necessary. It moves beyond just an ethical debate into pure strategic thinking, strategic resilience.
And looking forward, what's the trajectory?
Well, the sources are pretty clear. This isn't a fad. They predict an acceleration towards conscious business models, probably quite significantly by 2030. And it's being driven by multiple forces: market demand from consumers, sure, but also investors increasingly looking at long-term ESG factors, environmental, social, governance metrics. And as we discussed, the values of the incoming workforce demanding integrity.
So businesses that don't adapt, they might find themselves struggling.
Increasingly, yes. Struggling to attract talent, struggling to keep customers loyal, facing more regulatory and investor pressure. The headwinds will likely get stronger for those who don't internalize these principles.
The momentum definitely seems to be with this ethical edge. Okay, we want to leave you, the listener, with something to think about building on all this. If conscious culture and leadership are the safeguards against short-term thinking, how can you, personally, as a consumer, an employee, maybe a future entrepreneur, how can you demand the proof, the transparency, the metrics that show a company's commitment is real, not just PR?
Yeah, think about the companies you interact with daily: your bank, your supermarket, your employer. Are you actively choosing to support the ones that seem to embody those four pillars? Because ultimately, your choices, where you put your money, where you lend your skills, those are powerful drivers of this shift. So maybe ask yourself, what's one small piece of accountability, one metric I could ask for or look for today that would push a company just a little bit closer towards a truly conscious culture?